Welcome. I am Ernie Goss, Professor of Economics and McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska, coming to you this first business day of January, in fact, the first business day of 2016, to report on what happened in 2015, but primarily focusing on what happened in December 2015. According to our survey of businesses in 9 states stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, from that we get a leading economic indicator. Now, folks, I'm sorry, but so thus far it's not leading as much as we thought it was. In other words, our index is down, the national number is down, yet the economy continues to move along in a overall economy, that is, in a positive direction. So anyway, we'll see if what the future bears for us. But the growth, our overall number fell below growth neutral, and that's the 5th straight month. And now growth neutral is 50, 0 to 50 to 100 ranges in there above, and it was below growth neutral. In fact, it was below 40 for the month of December. Not a good number. The overall, as I said, fell to 39.6 from 40.7 in November. That's the lowest since the recession back in February of 2009. Now, I don't mean to laugh. That was a little a signal of concern there, my nervous laughter there. Employment gauge sinks to a very weak 37.1 from 41.7 in November. We've lost about 18,000 jobs in the 9 states now combined. Now that's about a 1.3% rate of annualized rate of loss. That's twice what the U.S. is losing. Now again, I know you're out there, you're saying, well, I thought the economy is growing. The overall economy is growing, however, at a very slow pace. Manufacturing economy is actually declining and withering. Now, what's the good for the year, in terms of, I'll say the good, bad, and the ugly. The good was vehicle manufacturing and parts, production of parts for vehicles, very strong over the course of the entire year, and that's throughout. A lot of states have strong concentrations of that, particularly Missouri and Minnesota, 2 states that we survey. Now the bad, the non-durable goods manufacturing, that of course that would be something like ethanol, that would be food processing, not as strong there. Bad's a little too strong a word. Ugly, no, I don't think this is too strong a word. Agricultural equipment manufacturing, anything where you depend heavily on exports, not doing well. Now, what would give us a sweet 2016? What would give a sweet 2016 would be a weak U.S. dollar. Let's cross our fingers for a weak U.S. dollar. Let's also ask our congressional representatives to get moving on the TPP, that's the Trans-Pacific Partnership. Let's go on that. Let's get approval there. That would boost agriculture, would boost manufacturing, boost the overall regional economy. Now, what would give us a sour 2016? That would be continued weak global weakness across the globe, of course. And of course, another factor would be a stronger U.S. dollar, which of course would come from Federal Reserve rate hikes. So we could have a rate hike in the first quarter of 2016. That's a big concern. So now I'm showing you here, if you look from June 2014 to December of 2015, that's just last month, you see the blue there, that's the Mid-American, that's Creighton blue. Not good. You see how it's been trending downward. There you see the red. Now I don't have no Decembers for the U.S. That'll come out later on this morning. I expect that to trim downward as well for the month of December. So things are slowing down in the manufacturing sector. Now when will it spill over into the broader economy? It already is. The broader economy is slowing down, but it's still not in negative territory as the manufacturing is. Now looking at it, inflationary pressures for the month slumped to the gauge to 42.6 from November's 45.3, and that's the lowest since, again, in 2009 when we were in a recession, so the inflation gauge trims downward. Expected wages, we asked the businesses how much they expected to raise wages this year. 2.2%, still not what we want. We'd like to see 3 to 4% there. Of course, 2% is what we've been seeing for quite some time, and that's what we've been getting for quite some time, 2.2, 2.3% growth. Now, what to watch for. If we're thinking things aren't going that well now, what are some signals to watch? Keep an eye on that jobs report, which comes out on this Friday. Of course, this Friday we'll see the report for the month of December. The PMIs for January, keep an eye on that. Also December, ones that come out later on this morning. Core CPI, which comes out the middle of the month. Keep an eye on the core that subtracts out food and energy. That's been growing a little too briskly. Now, a little too briskly, meaning it's approaching the Fed's target. When it gets there, you're going to see some more rate hikes as the Fed moves back to what they consider to be normal. Normal would be 3 to 4%. We're at 1/4%. So you see what could happen to rates, interest rates on the short end, not the long end, short end. What are the risks? What are the risks for this economy? And that's the U.S. and the regional economy. The Open Market Committee, the Federal Reserve Open Market Committee, that's FOMC, meets on January the 26th and 27th. When they meet now, the outcome is it's going to be not so good, meaning we're going to stand here, as Janet Yellen says, maybe we're going to raise rates again. That's what it's looking like, first quarter of 2016. Inflation, keep an eye on that 10-year Treasury. When it ticks up, approaching 3%. Now we're nowhere close to 3%. We're about 2.3%. That'll start putting in inflation in there. Now, not enough inflation right now to be a concern, but keep an eye on that. Finally, the value of the dollar. The value of the dollar grew 10% this year, 10% in 2015. That has really had a dampening impact on the U.S. economy, particularly agriculture, particularly manufacturing. And of course, that's the economy we're looking at in this part of the country. So that's it. And until we meet again here on the February the 1st, which will be the first business day of February, reporting for January. Until we meet then again, this is Ernie Goss with the Hyder College of Business here at Creighton University in beautiful downtown Omaha, Nebraska, saying, may your economic cup runneth over.